Imagine a world where the flow of money, the rise and fall of prices, and even the fate of entire economies is quietly guided behind closed doors, where decisions made in a single office can ripple across continents, affecting everything from the price of your morning coffee to the stability of global markets. This is the hidden universe of central banks, institutions that wield immense power, yet remain largely invisible to most of us. Today, we're peeling back the curtain to understand the real role of central banks and why they matter far more than most people realize. When we think about money, most of us imagine cash in our wallets, digital balances in our bank accounts, or the occasional credit card swipe. But at the heart of every economy, beyond the transactions and the everyday purchases, there's a central force managing the lifeblood of money itself. Central banks are not just banks, they're the ultimate arbiters of financial stability, the quiet guardians, or sometimes manipulators, of entire national economies. Their influence stretches from inflation and interest rates to employment levels and even the long-term trajectory of economic growth. Yet, despite this influence, their actions often seem mysterious, even arcane. People hear terms like quantitative easing or interest rate hikes and tune out, assuming it's a world reserved for economists and policymakers. But in reality, the decisions made by central banks touch everyone. They can make your mortgage more expensive, your savings grow slower, or your paycheck feel stretched in ways you might not immediately notice. Understanding central banks is not just an intellectual exercise, it's about understanding the forces shaping your financial life. To grasp the real role of central banks, we need to go back in time. Central banks, in their earliest forms, were created to stabilize national currencies and manage public debt. They were designed to prevent the chaos of financial collapses that could destroy entire societies. Over centuries, their responsibilities grew, adapting to increasingly complex economies and financial systems. Today, they're responsible for issuing currency, regulating commercial banks, managing inflation, and maintaining financial stability. But their power extends beyond what meets the eye. Central banks are the ultimate lenders of last resort. In times of crisis, when private banks hesitate or collapse, central banks step in to inject liquidity into the system, preventing widespread panic. They hold the keys to controlling inflation, adjusting interest rates to influence borrowing and spending, and even stabilizing currency values in international markets. These are decisions that ripple quietly yet profoundly through society. At its heart, a central bank has a few critical functions. One of the most visible is controlling the money supply. By deciding how much money exists in an economy, they can influence inflation, the rise in prices over time. Too much money can lead to runaway inflation, making everyday goods unaffordable. Too little can slow economic growth, increasing unemployment and reducing opportunities. Central banks walk a delicate tightrope, balancing these forces with precision. Another essential role is setting interest rates, a tool that might seem abstract but directly impacts loans, mortgages, and savings. When interest rates rise, borrowing becomes more expensive, slowing spending and cooling an overheated economy. When rates fall, borrowing is cheaper, encouraging investment and stimulating growth. Through these mechanisms, central banks can smooth the peaks and troughs of economic cycles, attempting to prevent extreme booms and devastating busts. But there's more beneath the surface. Central banks also oversee commercial banks, acting as regulators to ensure the broader financial system remains stable. They monitor risks, enforce rules, and sometimes intervene to prevent systemic failures. This oversight is invisible to most people, yet it's critical to preventing economic disasters like bank runs or widespread defaults. Without this regulatory role, the economy could be far more volatile and unpredictable. Perhaps the most intriguing aspect of central banks is their subtle influence over markets and behavior. Unlike a government ministry that sets explicit policy, central banks operate largely through expectations and signals. Public statements from central bank leaders can sway markets before a single policy is enacted. Investors, companies, and even households adjust their decisions based on what they anticipate the central bank will do next. In many ways, the mere perception of central bank action can be as powerful as the action itself. This subtle influence is why central banks are sometimes called the invisible hand behind modern economies. Their decisions are not about controlling every transaction, but about shaping the environment in which money flows, businesses grow, and people make financial choices. When they act well, the effects are stabilizing, creating confidence and predictability. When they misstep, the consequences can be profound, sparking crises that ripple across the globe. Central banks often attract attention during crises. When economies collapse or markets panic, central banks become the front line of response. This can involve cutting interest rates, purchasing government debt, or providing emergency funding to banks. These interventions can save economies from collapse, but they are not without controversy. Some critics argue that central banks can create moral hazard, encouraging risky behavior by guaranteeing bailouts. Others worry about the long-term consequences of policies that expand the money supply, potentially fueling future inflation or asset bubbles. Public perception of central banks can also be polarized. Some view them as essential stabilizers, protecting society from the chaos of unregulated markets. Others see them as distant institutions with excessive power, making decisions that benefit elites while leaving ordinary citizens exposed. The truth lies somewhere in between. Central banks operate in a highly complex environment, balancing competing priorities and facing impossible trade-offs. Their role is neither purely heroic nor entirely sinister. It's deeply pragmatic and profoundly consequential. In today's interconnected world, central banks do not operate in isolation. Their actions in one nation can influence currency values, investment flows, and economic conditions elsewhere. Central banks coordinate with international counterparts, participate in global forums, and respond to crises that transcend borders. This global dimension adds another layer of complexity and underscores why central bank decisions are watched so closely by governments, investors, and the public alike. Even more, central banks play a role in shaping long-term economic policy. Decisions about monetary stability, inflation targeting, and financial regulation influence how societies grow over decades. The ability to maintain trust in the currency and financial system is a cornerstone of economic resilience. Without effective central banks, long-term planning, investment, and growth could become far more uncertain and volatile. At this point, you might be wondering, if central banks have so much power, why don't we hear more about them? Why do their actions often seem invisible, yet their impact is undeniable? The answer lies in their design. Central banks are meant to operate with a degree of independence from politics, insulated from short-term pressures. This independence allows them to make decisions based on economic realities rather than political expediency. But it also means that their influence often unfolds quietly, in ways that are subtle yet far-reaching. It's easy to reduce central banks to machines, algorithms, and policy statements, but at the core, they are run by people, economists, policymakers, and leaders making high-stakes decisions under enormous uncertainty. These individuals interpret data, weigh risks, and attempt to anticipate the future. Human judgment plays a crucial role, and with it comes both brilliance and the potential for error. This human element reminds us that the stability of our economies rests on expertise, experience, and careful deliberation. Understanding central banks is more than an academic exercise. When people grasp how monetary policy, inflation, and interest rates work, they are better equipped to make financial decisions, plan for the future, and engage in informed debate about economic policy. Awareness of central banks' actions also encourages accountability. While these institutions are independent, they are ultimately serving society. Public understanding ensures that their power is exercised responsibly, with transparency and purpose. Think for a moment about the last time you felt the pinch of rising prices, the frustration of high borrowing costs, or the relief of a stable economy. Central banks are behind all of it, quietly shaping the environment in which we live, work, and spend. Their influence may be invisible day to day, but it is omnipresent, touching every corner of our financial lives. Central banks are neither infallible nor omnipotent. They face impossible challenges and operate in an arena full of uncertainty. Yet their role is indispensable. They are the guardians of monetary stability, the moderators of economic cycles, and the silent architects of financial systems that underpin modern life. To understand them is to understand the forces that shape the world around us, forces that influence everything from global markets to personal savings, from corporate strategies to government policies. In the end, the story of central banks is the story of trust, responsibility, and balance. It is a reminder that even in a world dominated by markets, policies, and algorithms, human decisions remain at the center of our economic fate. And it is a call to remain curious, informed, and engaged, because the better we understand these hidden forces, the better equipped we are to navigate our own financial futures. Next time you see headlines about inflation, interest rate changes, or market volatility, remember, there's a complex, quiet force at work behind the scenes. The choices of central banks today shape the opportunities, challenges, and realities of tomorrow. They are not just institutions, they are the pulse of the economy, a reminder that the flow of money is never just about numbers, but about people, societies, and the delicate balance that sustains our world. If you found this deep dive enlightening, take a moment to like the video, subscribe for more insights into the hidden forces that shape our world, and share your thoughts in the comments. How do you feel central banks affect your daily life? Your perspective might spark the next conversation that helps all of us understand the invisible currents shaping our economies.